Hello, you're watching the Look Ahead programme with me, Katie Pilbeam. I'm about to run through all of the data releases that are set to drive the markets on Wednesday, June the 29th, and there's a lot of them. It's going to be a busy day for economic stats, starting in Japan with the retail sales expectations set to come in at minus 1.6%. Now, this represents a third consecutive month of falls, which bolsters the argument that a nationwide sales tax increase, which was scheduled for April next year, should indeed be delayed. It's now understood to be delayed for 2.5 years so that consumers aren't put off spending, which of course worsens deflation. And that's really Japan's biggest problem right now. Let's focus on Europe for a minute, because we've got German GfK consumer confidence. The July consensus is set to remain unchanged at 9.8 for that one. Now the UK, let's talk about that one, because right now it kind of feels like it's the centre of the universe. And one sector that is already feeling some pressure from the Brexit decision is the housing industry. Now we're going to look out for the nationwide housing prices just here, with June expectations set to come in at 4.8. Now the Treasury has already warned that UK house prices could drop by 18% if there is a big economic shock from Brexit. Also playing into this, credit rating agency Standard & Poor's, who have already downgraded the UK economy, suggested that the recent years of property price rises could be reversed. More numbers to scrutinise just here. We've got the Bank of England consumer credit there, and that's going to be published too. So the UK, as I say, a centre of everything right now. Let's talk about the Eurozone consumer confidence, because it's expected to come in at -7 for June. Now, this is after hitting its highest level all year in May. Now, although this figure remains above the Eurozone's long-term average, though, it's worth mentioning that. Now, really, with this number, it's far too early to even talk about how Brexit has impacted it. But going forward, it's all about how Brexit's negotiated, the deal, and how Article 50 is implemented. Let's talk about the German Consumer Price Index for June, because that's set to come in at plus 0.4%, which actually represents a continued rise out of negative territory. Now, price pressures remain weak despite the ECB's ultra-loose monetary policy. But the euro area, really as a whole, it's struggled with little or no inflation for the past year, caused mainly by a plunge in oil prices. Of course, that, as we've seen, could be changing. Now, over in the US, let's talk about that, because there's actually three key releases to watch for this one. There's the US core PCE number, set to gain actually 0.1%, so just a smidgen there, in line with expectations though. Now, this is supporting the case for the Federal Reserve to raise interest rates in July, but considering the Brexit, any positive domestic news coming out of the States right now really is being overridden by the theme, the factor, and the Brexit. All right, let's also talk about the US pending home sales. They're set to come in at -1%. Now, crude prices as well could move in reaction to the crude oil inventories. Now, crude prices have been falling this week, with Brent actually hitting a 7-week low. That was on Monday. That's thanks to the rallying dollar and the Brexit market uncertainty, of course, which is feeding into everything. All right, that's pretty much it. Thank you very much indeed for watching. I really appreciate it. And if you haven't already done so, have a look at the corporate news as well, because it's also a busy day for that department too. See you tomorrow.